Welcome to the Harvest Podcast, where capital markets, growth, and disruption collide. Today, we bring you more revelatory insights from emerging growth companies.
Hi, and welcome to another show here with me, Carmel Fisher, where we bring you all the latest nuggets so you can do your due diligence in the exciting markets out there. Today, we're excited to spotlight Earth Science Tech with the ticker on the OTC ID, and it's ETST. With me, I have CEO and Chairman of the Board, Mr. Gio Saumat. I hope I'm saying your name correctly. How are you? And welcome.
Good. And yourself? Thank you for having me.
Excellent. Yeah, please just clarify the name pronunciation there so we all clear.
Yeah, Giorgio Saumat.
Oh, I had it right. Sounds good. Thank you for joining us. Of course, this Earth Science Tech story is a very interesting one. And, just to get us off and on the right foot, help us understand what the broader mission and vision is.
So Earth Science Tech at this time it's basically a strategic holding company with the core assets being in healthcare, mostly compounding pharmaceuticals and online telehealth. So the idea is to create, or we are creating, a vertically integrated healthcare type company, so that we have from the marketing side through Peak Now online telehealth subsidiary, all the way through Mr. Meds and RX Compound Store that fulfill the patient.
Awesome. So there was recently a directive updating the industry classification to an SIC 2834, which formally identifying as a pharmaceutical entity since 2022. What was the reason for this? Just help us understand your strategy.
Right. Thanks. Well, what happened is the company at some point in its history, prior to my involvement, was involved in the CBD business. So a lot of the data aggregators had the company listed as a marijuana related business, and it was creating issues for potential shareholders who were trying to purchase a stock, or even in some banking aspects of the company. We figured the easiest way to kind of get it out there, instead of calling everybody individually, was just to issue that directive to the company. We think it also helps tell people what line of business we're in, and it definitely should change the investor perception, right? Because a lot of people weren't sure, were we a marijuana business, were we, in compounding pharmaceuticals, or we pharmaceutical company, or we telehealth? And I think this kind of directs the market and the industry in general as to where or what we are.
Wonderful. And was there a complete rebrand done with that name change?
Actually, there was not. This was just mostly a clarification issue. There was again, just an issue where people weren't sure, banks weren't sure, investment banks were not sure. And so since they could not decipher whether we were CBD or we were not, it was our intention, there was our intention to clear it up. It's actually worked. The phone calls from shareholders asking us to call their banks or to call their investment banker are gone.
Awesome. The shortest path to that result. Amazing. Now, you recently received FINRA clearance on Form 211 to initiate quotations. Can you explain what this clearance enabled for Science Tech's capital market strategy?
Okay, so in terms of tapping the capital markets for capital, ETST has not done that in over 3 years. The company is very strong, cash flow positive, profitable. We have a very strong balance sheet. The 211 was needed to set the company up for our future growth and any potential uplist we may have in the future. And also, the company did come prior to myself and the current management team taking it over. It was in a receivership, had a little bit of an ugly past, and it lost its 211 status as a result of that. So regaining it we're setting us up for this next stage of growth and kind of the ability to get our story out there and what we're doing.
Awesome. I'm going to take the question one more time just because I feel like I didn't do it smoothly enough, and then I'll jump immediately into the next question and you can answer from there.
Okay.
You recently received FINRA clearance on Form 211 to initiate quotations. Can you explain what this would enable for Earth Science Tech's capital market strategy?
Okay, so as far as our capital market strategy, we have not had any need to tap the capital markets in the last 3 years. The company is, strong on a cash flow basis and has a very strong balance sheet. The 211 mostly was to clear up the history of the company, right? Prior to the current management's involvement in the company, The company had been involved in a receivership and some other difficult situations. They lost their 211 status as a result. And we had to go through the background checks, the checking of the shareholders, and clearing everything so that we can prepare the company for a proper uplist.
Awesome. And do you think that it has improved the trading liquidity at all, or would it in future?
It should in the future. It should in the future. And as we get our story out there and more people become aware of what we are, there's not that many, at least that I'm not aware of, OTC companies that are cash flow positive, that have, positive EPS and are have a strong balance sheet as we do, right? We don't really have any debt, very little debt. And the only debt we do have is with our suppliers due to certain terms. So, I do think it's going to help with our liquidity, but it's going to take some time for the market, for people to finally know who we are and for us to get our story out.
For sure. And so looking at the Q2 fiscal 2025 results, they were described as strong, and analysts note that growth is set to ramp up. Break down the key revenue drivers behind the recent performance, please.
Okay, so I think for Q2, the most glaring revenue driver there was Peak's Curative or peaknow.com, which is our online telehealth. Going forward, though, if you go look back in 2025, Q1 and Q2, and to a certain extent, part of Q3 was kind of the ramp up of Mr. Meds, which is our second from compounding pharmaceutical lab that's based in Texas. And I think going forward, as Mr. Meds expands the licensing in new states where RX Compound Store is not licensed and continues to fulfill the growth in Peaks, I think that's the number one driver. I think the expansion of territories is the one story that's going to get our revenues up and our profits up.
And talk to us about potential catalysts that will propel future growth.
I think right now, this is kind of an awkward way to look at it, I think, probably a little bit contrary to the way some other people in the industry look at it, right? But due to certain movement in compounding pharmaceuticals, mostly weight loss and some of these other peptides and things of that sort, I think there's been a lot of effects on people's bodies. And I think that now people are seeing what those effects are, and now they're looking for new compounded medications and new ways to either reverse or improve their bodies from a health perspective due to the results of those things. And I think that we're very well positioned in diversifying our offering to attack that change in the market.
So you've mentioned once or twice, getting your story out. What is your investor relations strategy or your communications outreach strategy that's going to bridge this gap for you in getting the story out?
So we engaged Hayden IR, I believe in early January. We had been waiting to get our story out. We had been waiting for the clearance of the 211 in order to get our story out. It didn't really make sense to go out there and tell everybody our story when we really didn't have enough market making presence and that the liquidity couldn't ramp up, So we hired Hayden. They're very well respected in the industry. And our expectation is that, they have good connections. They understand our business model. They're giving us great direction as to what to do in the future to make it a much more concise story for the investment community. And I think, we're starting month 2 of their engagement, and we've already seen a lot more inquiries on the company. And if you look at the liquidity in our stock, it's beginning to improve. So I think over time, Hayden's going to do their job and bring in more institutional investors for sure.
Which is right up the pathway for that uplisting, which just gets you exposure to a lot more of those institutions. Now, with their engagement, which specific milestones or corporate developments do you plan to communicate more effectively to both retail and institutional investors?
I think our biggest thing is hammering down that we are a profitable company, that our earnings and revenue is growing. We made some diversification moves in 2025, and I think that we're going to be building on that throughout the rest of 2026. I just think that getting that story out there and properly explaining to people to the investment community what we're moving towards is going to be imperative to the growth of the company and the growth of the stock. And I think Hayden's going to do that in a very well and concise way. I think they're going to be able to highlight the things, such as our vertical integration between our telehealth, our MOC Teledoc, which is our doctor network in the middle, and then our pharmaceutical labs that fulfill. I think that's a huge story. There's a lot of companies out there, much larger than we are right now, that wish they could be in the position that we're in. Luckily, we were small, we're nimble, we were able to put it together, and I think now it's time to scale it, which is what we're headed towards.
And, with the strong Q2 results, what can you tell us about your current product pipeline and what stage are your lead candidates in?
So we always have research and development going on in the compounding pharmaceutical. It's not, it's not your off-the-shelf kind of pharmaceutical products. So we're always looking for something new. We have our doctors that are constantly suggesting new compounds for different things for, whether it's sexual health, hair loss, skincare. I know that right now Peaks is working on an anxiety medication, things in that realm. And we're always looking for new things. And since we have such a vast network of facilities and doctors that order from our compounding pharmaceuticals, we have a very good pulse into where the healthcare community is going when it comes to health and wellness. So I think our pipeline is strong. And I think as we continue to diversify and build on these products, we'll see the results of that.
Speak to me about key regulatory and commercial milestones that investors watching here and all those that this will reach. Tell us what they should be looking out for over the next 12 to 24 months that could drive significant value creation.
The biggest one that comes to mind is at this time, there's certain medications that the FDA or certain peptides that the FDA has ruled cannot be compounded. I don't have any inside information on this, but I do understand that they are reviewing those procedures and decisions. And I think that once they continue to go through this process and see that it's in the benefit of the public to remove those peptides from being restricted, I think that's the most important regulatory aspect of our operations at this time. Other than that, I mean, there's always the normal headwinds and hurdles, but we've overcome the big pharma versus small pharma before, so we're not really worried about that. I think right now it's really in the FDA's hands and how they do the peptide regulation.
And we'll be here to share more developments as they unfold, including the FDA regulation and anything else related to science tech. Again, we've been chatting with CEO and Chairman of the Board, Giorgio R. Very happy to have spoken with you. They are on the OTC ID as ETST. I'm Carmel Fisher. And you guys stay tuned for more. Thank you.
Thank you, Carmel. Thank you very much. Thank you for having me.
Brought to you, as always, by the Harvest Podcast, available anywhere you listen to podcasts.